Do you know this feeling when opening your stock portfolio in the morning and then seeing it dipped another 3%, that you start doubting and asking yourself a question? Did I overpay for my positions? Did I pay too much for the stocks? Did I went in too early? All those questions appearing to us, and then we are even thinking of selling sometimes. In this video, I'm going to reveal to you all the characteristics that next time when you buy your stock, you exactly know that you had a great deal and you didn't overpay for it. Welcome to Growth Bulls, Alex here, and I'm super excited to welcome you to the next episode. In today's episode, we're going to do all the homework together. You will exactly understand when to step in and when to sell a position as well. I'm gonna give you all the indicators and we're gonna do it together for your favorite stock. There are two different investors out there, and for both there are two different strategies how to find the best entry position. Investor A, the long-term investor. He buys the burger company McDonald's. He expects the stock appreciating in 10 years and he expects the dividend get paid every year. That is investor A. For him it's important to look at the fundamental analysis of the company. How is the company doing? How is the sector doing? Is the revenue growing? How much debt do they have? And so on. If you would like to know more about investor A, just let me know. I will do another video how to do the fundamental analysis to find the right entry opportunity. And then we have investor B. Investor B is different. He wants to invest in Tesla. Investor B wants to trade the volatility. He wants to step in when the market price is low, and then when the stock price of Tesla hits high because Elon Musk tweeted something cool on Twitter or whatever, and then he wants to sell because he made a good profit in the short term. His investment horizon might be different. It might be just one day, he's an intraday trader, or he might be a swing trader. It might be 6 weeks, 2 weeks, and so on. Really short-term investor. It's like with the housing market. You buy a house, you renovate it, flip it, get some great profit. That's investor B. And this investor, it's me. And therefore we're going to focus with you on that part because I believe that you are also one of those investors that want to trade the volatility. And if you want to do the fundamental analysis and don't want to trade the volatility, let me know in the comments. I will also do for you, investor a great video as well. And now let's get started with investor B. We will do the homework together. You pick your favorite stock that you like. It can be the burger company. You can be investor A and invest in the burger company B. Or you can invest in any other company you like. So just pick one company and let's do the homework together. Alright friends, let's do the homework together. Let's find some great entry opportunities. And you always remember you want to buy low and sell high. So first of all, open tradingview.com. TradingView is a good analyzing tool and where you can analyze all the charts. It gives you all the indicators and you can make also a free profile where you can save your analysis as well. So now when you're ready and you made your stock pick, if it's not McDonald's, you might choose another one, maybe Asana like I did here. You type the ticker symbol here, search the stock, and then you go on full feature chart. It opens for you something like that. If not, let's prepare the chart together. And probably you won't have exactly the same view because I mentioned I already edited my chart below. You will need 3 indicators. So you go ahead and type here on top. The first indicator is RSI, Relative Strength Index. And if you want to know all the definitions, go ahead. I think you can educate yourself for the next 50 years probably because there are thousands of different indicators, maybe more. And there are every day new indicators coming out. But for this we only need 3 different indicators. Relative Strength Index. Another one, we're gonna look at the moving average, at the simple moving average. And you might ask me, why don't you use an exponential and so on? Again, I want to keep it simple for everybody here, and that I think it's enough to get the right or the great entry position. So moving average, click on that one. And the third indicator you would like to use is support and resistance areas. So you just type support and resistance, and you see here a lot of different ones, and probably this one is the best. So just click on any of the support and resistance areas. And now you would need to change the moving average because yours will be probably moving average 9. You would need to change the length. Click on the wheel here, then type the length to 100. Okay, then you will get this blue line here. That's our RSI, our Relative Strength Index. And this is our support and resistance line. There are many support and resistance lines. I just made 2 of them here just for illustration purposes. So first of all, you would like to invest in a company that has the right trend. If you want to speculate on the market and expect the trend to go up, of course you want to expect when the trend is going up. And you want to invest in the companies that are going up. If you would want to invest in companies that are going on a downtrend, so you're a bear investor, then of course you will need to do the opposite as a bull investor. On this channel we are all bull investors. That's why I would like to choose a company that has a bull trend, so an upwards trend, and therefore we have, I think, the right pick here. Asana, the stock you see here, how do you first identify if the trend is right? So if you choose the moving average 200, that's the blue line here, and when you see the stock is trading above the moving average 200, you see it's on the right trend. It's an upwards trend. So now let's say you have your trend line. You identified it's trading above the moving average 200. Now you would like to go and place your position. And then you're thinking, what is the best time to get in? Never chase a stock. If the stock is going up and you think, oh, I'm missing out. Like for example here, let's say you would say, oh shit, I missed out such a huge bull run. And I would like to get in because the stock will go up again. It might be that the stock will go further, but you never know. And most probably because all the indicators don't speak in our favor, the stock was trading sideways and then it had a crash. And imagine you would be panicking and you would lost actually a lot of money because the price from here to here is around 15 till 20%. The second indicator I look at is the relative strength index. Relative strength index is this indicator down here. And when the stock is here below 30, it means it's oversold. And when it's above 70, it means it's overbought. So too many people are buying that stock. That way it's pushing the indicator here up. So, and what is the best buying opportunity? The best buying opportunity for me, uptrend. It's close or at the moving average 200. So it's maybe even above. It holds the support area and it's oversold. Okay, let's take a look. Here, for example, we look at the stock, it's oversold. It is, here's another resistance area, so it was close to the resistance area, which is good. The stock resisted in the beginning, and probably I would have placed a position of on $28 and bought the stock here. What would I do? Because it didn't touch the moving average yet, and there's another support area below. I wouldn't probably place my entire position here. I would probably invest like 50% of the amount of money I would like to invest in that company right now, at this moment, or 75. So that would be my strategy. Then as you see, the stock went up and it crashed even further, but then it held the support area. You see here, it holds the support area, and it's again almost oversold. So that's, at that point, I would add another 50 or 25% of my position and get more in. And exactly the same way I'm doing when I'm trading it upwards. So that's here, the stock cut the moving average 200, which is a great sign. The stock starts to go up and it goes up. And here it becomes first time oversold. At this point here around, I would probably sell 25, 50 or 75% of my position. It all depends on my strategy. Probably here, because it was really, really high oversold, I would have sold 50% of my position. And then I would look further what happens then. If the stock is still trading it oversold, I probably would get out somewhere here. You might ask yourself, yeah, but that was stupid because he could gain another, I don't know, 10, 15% by taking this candle. But we never know that. We never know when the stock is going to crash back. And therefore, I think it was a great investment. Let's take a look. $27.88, so almost $28, and got out somewhere here, 34. So it's more than 10% return, right? Just make the math, it's between 10 and 20% something. But it is great. Imagine like in a time horizon from 12th of January, from 6th of January. So it's 6 days and you have 10% return. I mean, the S&P 500, if you look at on average, needs for that return a year, right? And here you got it in 6 days and you can repeat it all over again. It doesn't matter if you missed the entire stick upwards, But here again, let's take a look. We have oversold. I would take, it's a good position maybe to step in. It almost touched the moving average. So here I would place a larger position. And then if it would go further down and hold the support or the resistance area, let's say here 32.91, I would make or bounce back and place a bigger position or let another percentage to the money. But it didn't, and it started to go up again, and it was here, it was oversold, and I probably would go ahead and sell my position here, not completely, 75-50%, and now wait what happens with the first. So you take already some profit, and it was again more than 10%. Just take a look at the numbers, and I think it's great. You can do couple of swings within 3 months. So if you look at a stock, another stock, let's take CrowdStrike, CRWD. So CrowdStrike bounced in the last 3 months once, then I wouldn't have traded because I don't want to follow that. So twice, 3 times. So 3 times you could make around 10% in 3 months. So it would be a return of 30%. You never know. You might have sometimes positioned that the trend is gonna go down and it just breaks the upwards trend. That can happen. Obviously, we're in the stock market. Nobody knows what's going to happen. But with that strategy, at least you're not overpaying for the stock for short-term investment. It's not about going long-term in on that stock and saying, okay, what's gonna be in the future? But it's really good strategy for short-term swing trading, or even you do day trading if you just go on the 1-day charts and analyze the same type of strategy. You see here, oversold, overbought, trading above the M&A 200. The candles don't look that beautiful. Probably that's the reason I don't like day trading. But no, I think it's really the timely matter and all the stress brings into it. But you can apply this strategy for any time of horizon. And I hope I helped you today to find the best buying opportunities and to get the best time to step in the stock market. Congrats, you have done all your homework. Now let's just sum it up. First, have you prepared your chart? Add the indicators that you need. What is the first indicator? Moving average. The second one is relative strength index, correct, and support and resistance areas. Then, is it the correct trend? Does it trade above the moving average 200? Is it the correct part of the RSI or relative strength index? Is it in oversold, so below the line? Then what are you gonna do? You buy and you sell when it's overbought. And then also just keep in mind, take your profits, don't be too greedy, and keep up with the market and keep patience. You will have always the right entry position. Thanks for joining me. Alex here from Growth Pulse, and if you like my content and I give you the new perspective on the stock market, please make sure to subscribe and hit the smashed like button below.